Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
All right, so welcome to Mortgage Mom Radio. I'm Debbie Marcoux. I am the Mortgage Mom. And today we are talking about mortgage applications. I've mentioned in my past shows the last couple of weeks that interest rates were improving. They were getting better. We had 7 straight days of declining interest rates. Then we had a bit of a tick up in rates very, very quickly. But that is what we do. We are on the roller coaster now, and hopefully the roller coaster is the majority of the time we are going down and interest rates are improving. But of course, we can't just continue to decline day after day after day. It's going to be some bumps in the road. We are going to get the declines and then back up again and then the decline again, right? So it's going to be this roller coaster of down and then up and then down and then up. And then obviously our hope is that we only go up less than the time before and that we go down more than the time before did. So right now, as of a week ago, I did this show on Wednesday, and I told you guys that news had come out that did indicate, or provided feedback of, where interest rates, the mortgage-backed securities, mortgage bonds, notes did not like what they were hearing, and it was negative for the bond market. So it did go ahead and start the interest rates going up higher. Now, since that time, we've been fighting to retain our levels. We are not necessarily horrible, but we didn't go up quite a bit from where we had left off a week ago, but we did tick up just a little bit. But with that decline that we got and with that very little amount that we went back up, so I'm going to give you a little bit of an example to give you guys an idea of what I'm talking about. So interest rates, let's call it 3 weeks ago, were a conventional loan. Okay. So we're going to work with conventional. Obviously our government loans, our FHAs and our VAs have lower interest rates, but a conventional loan on average, you would be calling and you'd be getting a rate quote interest rate without paying points. So again, many people, most loan officers right now are still, quoting interest rates with points. And so it can get very confusing when you're getting rate quotes to know if it's actually a good deal or not. And that is the best time to call the mortgage mom and say, hey, how does this sound to you? Happy to look something over for you and let you know that's a great deal. Keep going. No, that's not a great deal. Let's talk. Let's see what we can find you that's better. But anyway, maybe 3 weeks ago or so, 30-year fixed rate, you were probably getting a quote that was around 7.25%. Last week, right before interest rates, so the lowest day we had last week was Tuesday. So on that day, you should have been getting rate quotes for a conventional 30-year fixed rate that would have been in the high sixes, maybe 6.75, 6.875. You should have been somewhere in that ballpark. Now, as of today, we're probably around 6.875 to 7. So what did we lose? We lost about 0.125. So nothing significant, but enough if you're trying to get to a particular interest rate, you might have missed it, right? Well, it's going to come back. It's just a matter of how long is it going to take to come back. So over this last week, we have been fighting to maintain our levels. So we're trying to get to that 420. And we're not getting there. But we're not necessarily going back to 435, 440. We haven't seen that happen. So what has this done? It's brought interest rates down to a level that has made the mortgage payments more affordable. So it is bringing out a lot of new home buyers to the market that maybe had their plans on hold. So we are starting to see mortgage applications rise. We are also seeing refinance applications rise because we have a lot of people who need to refinance. They've either charged up their credit cards or they've taken out a home equity line of credit that's at a high interest rate, or they've done both. They've taken out a home equity line of credit and they've got their credit cards, really charged up to the roof. So we are seeing that there are people that are in desperate need to do a refinance. They have a ton of equity in their home. They know that they could get the debts paid off, but they have been waiting to do something until interest rates came down to a level that they could afford the monthly payment. So we are seeing that there is a lot more affordability with where our interest rates are today over where they were back in November, December, January, or February. So here in March of 2025, we're seeing much more affordability. So we are starting to see a lot more in applications. One of the biggest questions that I get, though, is how do I know if it's worth it for me to do a refinance? How do I know if it's worth it for me to come off hold and to start looking to purchase a new home? Simple answer to that is it's in the math. It's whether or not something is affordable to you. And there are a lot of things that you do want to take into consideration when deciding if this is the right time or if this is not the right time. So we're going to get into that here in a second. But number one, I do want to say thank you so much, you guys, for joining, watching the show. I want to remind everybody that this is an interactive show. You guys are more than welcome to put your questions into the feed and ask them. I will read them out loud and I will answer them for you. That is one thing for sure that is going to happen if you guys do want to chat. If you are watching this show at a later date and you didn't jump on and join live, but you would like to be live the next time that I go live, remember that you can get a text message with the link to join by as soon as I go live, you guys get that link. So you guys get the link the minute that I do go live, and that way you can just click on it from your phone and you can join the show. So how do you do that? You text the word mom. I am really losing it today. You text the word live. It used to be mom. So you're going to text the word live, Live, to 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. I think I'm a little tired today. The time change has definitely affected everybody, and I'm feeling like I'm one of those people. So text the word live, LIVE, to 844-935-3634. So how do we determine the math, right? What's the best way to know the math? So number one, let's look at somebody that has been wanting to purchase a home, and they're a home buyer and they've had their plans on hold. So it is really all about affordability. How much can you afford in the monthly payment? Well, how do you keep an eye on that to know that you might be getting into a period of time where it is worth it for you to start getting out there and re-exploring your options? How much do you qualify for? And, what is that going to get you in today's, real estate market? So how do you know what that monthly payment is going to be? So you want to run calculators, and the calculators that you want to run are ones that are going to give you specific numbers. You do not want to be running numbers that are on Redfin or Zillow, any of those apps, because when you do that, let's say that you see a home that you like and you see a home that you'd be interested in possibly seeing what those numbers look like. When you run their calculator, although it is giving you an idea of what property taxes and homeowners insurance and everything all included would be, it is not giving you the accurate numbers. It's pulling the property taxes from the current seller of that property. So if they bought that home for $300,000, but you're looking at that home at $600,000, you are way underestimating what that monthly payment might be for you. If you were purchasing that property with less than 20% down, or with a VA loan, or with an FHA loan, there are things that go into that loan payment that are in addition to just the principal and interest of the monthly payment. So with FHA, you've got mortgage insurance. You're financing an upfront mortgage insurance premium. With the VA, there is no monthly mortgage insurance, but if you are not considered disabled with the VA, then you do pay a finance fee, and that finance fee gets financed into that new loan amount. So the payment that you're calculating based on what you plan to put down is not the correct payment, because you're actually financing more than what, your standard loan amount would be. If you're doing a conventional loan and you have less than 20% down payment, again, there will be mortgage insurance. So all of these things are very important to when trying to determine if something might be affordable for you. So what you want to do is you want to find a really good mortgage calculator. Well, what is the best way to find a mortgage calculator? Okay, well, you guys want to get my phone app. So I've got the Mortgage Mom Radio phone app. It is my tools app. If you go to the App Store, that is actually my application app. So that is what you would be using if you were applying for your loan, moving through the program, moving through the system with us with an active loan application. But to get my tools app, you are going to text phone app, PHONE app, APP. So text phone app to my same phone number. So 844-935-3634. That is my tools app. In that app, you can actually calculate for both purchase and refinance what your monthly payments would be. So you can, if you are a refinance, if you are a current homeowner, you know how much your homeowner's insurance costs you per year. You know what your property taxes cost you per year. You know what your current loan balance is. You know how much you might have in additional debt that you would like to pay off. You know how much your home is worth. So you could go into my calculator and it's going to give you the option to choose purchase, refinance, or affordability. So if you're a purchase, you can go in and you can select purchase and you can put the sales price. You can put the amount of down payment. You can put your credit score. So you can put many different things in there. Now, there are certain things that if you are a brand new home buyer, you may not know how to enter. So for example, property taxes, you may not know what percentage to put in. For homeowners insurance, you may not know what percentage to put in. But this calculator will also calculate HOA dues as well. So it's going to calculate mortgage insurance. You're going to select FHA, VA, conventional, USDA. So depending on the type of loan program that you are doing, it's going to calculate accurately what the monthly payment is. So for those areas that you don't know what you should be inputting into that calculator, you can easily, in my tools app, hit the email Debbie or contact us button, and you can quickly type up an email and say, I would love to use the calculator. I just have no idea what I should put in for taxes and for insurance. Now I'm going to give you some ideas right here in the show so that I might answer a couple of those questions without you needing to reach out to me. And I can see Rochelle Evans jumped on. So Rochelle, thank you so much for joining. I love it. And I want to remind everybody, you guys, put your comments in there and ask your question. I'm more than happy to read them out loud and answer them for you. But you can, I'm going to answer some of those questions right now, but they're not going to apply to everybody because depending on the state that you are in, your property taxes will change. Depending on the county that you are buying in, the property taxes will change. Your insurance will change. So for example, what you pay in Texas for homeowners insurance north of Dallas versus San Antonio are two totally different numbers on average. What you're going to pay in Florida, depending on where you live, if you're near the coast, is going to be absolutely different than what you're going to pay in California. In California, depending on where you live, if you're in a fire area, which unfortunately a good amount of the state is right now, but depending on where you live will determine what your premium would be. So if you need to reach out to me, there is a contact me button on that phone app that you can easily reach out and ask me the questions and say, what do I input in these areas? I do not use this phone app. I can't see who's using it. I can't bother you. I can't reach out to you because you're using it. So it is truly, I've put this out for you to use to try to help you, to benefit you, to be able to figure out, on your own, is it time for me to reach out or not? And then it's got all of the contact tools in there. Apply for your loan is in there. Watch my YouTube is in there. If you're a first-time home buyer, watch the most recent home buyer workshop that I've done. You can click right on that and watch that as well. So there are a lot of opportunities in this tools app for you to get what you need. But I'm going to answer a couple of those questions right now for somebody that might be wanting to buy a home in LA County. So the majority of the loans that I do, I'm obviously licensed in many different states. I've got loans in Florida right now. I've got one in Tennessee. I've got quite a few in Texas. I do a lot of business in Arizona, since that is actually where my butt sits. I live in Arizona. So I do loans all over the place, but the majority of the loans of the clients that I work with are coming out of LA County. So in LA County, if you were asking me what should I put in for my property taxes, I would tell you for a new purchase, put in 1.25%. That is a good average. Orange County is going to be 1.1%, LA County 1.25%. Now, what that's not accounting for is if you're looking in newer areas that might have mellow roofs, then that is going to make those percentages higher. So again, if you want to reach out to me directly and say, this is the city I'm looking in, what do you think that I should input for these numbers? I would be more than happy to answer that for you so that you can continue moving on your way. Now, for a refinance, obviously, I mentioned that you own the home and you should know how much your homeowner's insurance costs you, and you should also know how much your property taxes are. So that should make things pretty easy for you to be inputting. So from there, it's going to ask you to input an interest rate. So now this is where you get to play around a bit and go, okay, so I owe $400,000 on my house. I've got a second for $200,000. I have $50,000 in credit card debt. And so I need a loan of $650,000. If interest rates today are 6.25%, what does that monthly payment look like for me? Is that affordable? You know what? That's not affordable. Okay, so where would my payment be at 5.5? Okay, you know what? That's actually a really affordable payment for me. So now you know that you need to be in an interest rate field of around 5.5% to get to your comfort zone. So now you know to continue to watch the show, listen to what I say, give you updates on kind of where our interest rates every person gets a different interest rate, but it gives you a general way to follow the market. So the phone app is really awesome. Make sure that you guys do download it and get it. And again, the same thing for somebody looking to purchase. I would really love to buy something at $600,000. Interest rate today was 6.25. That's probably going to be a condo. So I'm more than likely going to have $450 a month in HOA dues. What does that monthly payment look like for me? Okay, what if I were to put down, 10% instead of 3.5%? What if I were to put down 20% instead of 10%? And it allows you to play with the numbers and to get an idea of where you need to be. Why Not did say happy Wednesday, and Rochelle gives me fire and hearts. So Rochelle, I love that. Thank you so much. But get the phone app, you guys. So once again, how do you get it? Text phone app, 2 words, PHONE, and then app, APP. Text phone app to 844-935-3634. Once again, that's 844-935-3634. That's 844 We Lend For You. WELEND and the number 4. Now, also, that is the phone number to call my office. So if you have questions and you want to talk to me, call my office. If I do not answer, please leave me your name and phone number on my voicemail. I will call you back. I call everybody back. If you want to send me an email, I reply to everybody. There is nobody that does not get a response. So please feel free to send me an email. You can text. Obviously, you guys get the text message from me to watch the show. If you want to send me a text message with a question, please feel free to do so. If I can't answer through text, I'm going to ask you, can I get your email address? And, I'll send you an email. So I will make sure that you guys do get answers no matter how you want to reach out. But more on that calculator app, which is even better, is the affordability piece. So once again, if you are somebody that is looking to purchase a home, so whether you are a current homeowner or whether you don't own a home at all and you are looking to purchase a home and you are wondering how much that you could qualify for to purchase a property. So maybe you're a homeowner and you want to keep your house. You do not want to sell it and you want to go buy something else. Or maybe you've never bought a home before and you'd really like to. So there is an affordability calculator in there as well. Obviously, if you're doing a loan application with me, we are going to be able to get you to much better numbers than what you'd see in this affordability calculator. But this gives you a really good general idea of how much that you would qualify for based on what your income is and what your monthly debts are. So that's also a super cool part of the app. So again, guys, that's a great way to keep in touch. If you want to watch the show, it's got the YouTube link, so you guys can always go to that app and click on that link. You can call me right from that app as well. So just tons and tons of tools in there for you to get to a point right now where it might be time for you to be doing an application. But just think of it this way. I have a lot of clients that really misunderstand the whole refinance piece as well. So I do want to talk about this really quick, and then I'm going to end the show because I've found that we do better when we keep them shorter shows. You guys have the attention span to listen, and you get the good data, and then and then we'll be back next week. So one thing to keep in mind if you are trying to do a refinance and what you're trying to do is to consolidate debt, whether you've got a line of credit that you're trying to consolidate with your first mortgage, or whether you've got credit card debt, maybe you have all of the above. Maybe you've got a car that you would love to pay off. Maybe you've got an RV or a boat you'd love to pay off. Maybe you've got student loans, you've got IRS debt. Maybe you want to do home improvements. What you have to remember is that we're going to look at all of the different things that you're putting into one loan, and your payment is not going to remain what it was on your current loan. Your payment is going to go up. So you do have to remember that whatever your monthly payment is, let's say that your current mortgage is $3,000. And then let's say that you did renovation and you've got $200,000 on a line of credit or some sort of renovation loan, and that monthly payment is running you, $1,500. You're now at $4,500 a month. So what we're trying to compare is what would the monthly payment be in the new loan versus what are you paying for all of the debts right now. So if you've got $50,000 in credit cards, you've realistically got probably about $800 to $900 a month at least, probably much higher than that in minimum monthly payments and credit card debt. So what I get a lot is when we show the client the number, we could be saving them $1,000 a month, $500 a month, $1,500 a month. We could be saving them a large amount. But when they see the number on the new mortgage payment, they get really scared and they about fall over and they go, no, I can't do that. I can't do that. I can't afford that. What you don't understand is that you're already doing it. That is what you are paying right now monthly on all of those debts combined. You're already doing it. And you're actually paying even more. And the reason that you're falling behind and the reason that you're going to those credit cards and you're living on that credit is because you can't afford what you've got today. So, just remember that monthly payment is going to look bigger when you start to consolidate things. But is it less than what you were paying before? So I had one client say, well, what would you recommend that I do? I don't think that I feel comfortable being able to make that payment. And I said, well, you're not making the payment right now. What you're doing is you're going to your credit cards to survive. So what you need to do is you need to break this payment up. She did make enough money to afford this payment. It was just a really big shock to her what the difference in the mortgage payment was going to be from what her current mortgage is right now. But she's not taking into account all those other things that she's paying as well. So I said, well, what you need to do is you need to break this up. Number one, you need to put this on a bi-weekly payment plan. Bi-weekly payment plans are going to get you paid off quicker. They typically will take about 8 years off of the total 30-year mortgage if you pay every 2 weeks on that mortgage payment. Number two, by breaking it up, into every 2 weeks, we are going to make that payment less. So if you're making half of the payment every time that you get paid, which is making it more affordable for you to take on that new mortgage payment. But again, it's even less. So for this particular client, we were going to save her $1,200 a month by putting it all together for her. And she said, I just can't afford that. And I said, but you can't afford what you have today. And I actually went through all of the numbers and I looked at where she was at. And with just minimum monthly payments from what she makes take home, not gross, but take home to what she was paying out, she was in the hole $500 a month. And that did not include food, utilities, gas, car insurance, all of those other things that you need to survive. So by doing the refinance for her, we were saving her $1,200 a month, which not only took her out of the $500 a month negative, but then it also left her with the additional money that she needed for those other things. And again, it's a lot. It's a lot to digest, and you feel like, oh my goodness, I'm not going to be able to afford this. But she's truly not affording what she has today, and she's even in a much worse position than she was previously. So we can talk to each one of you, and we can try to determine what the best options are. We talked about the possibility of maybe her filing a bankruptcy and just getting rid of the debt entirely and keeping the mortgage that she has right now. But again, I'm not a bankruptcy attorney. I'm not an attorney at all. And so my job is to tell her it is an option that is there. It is definitely an option that is there if you're afraid to take on more debt, but you need to call a bankruptcy attorney and discuss the options with them. You own a home that has a lot of equity in it. So do you have enough in homestead exemption that the bankruptcy court would not make you sell your home to pay back the debt that you owe, that you stopped making payments on? So I do absolutely refer people in all different directions based on what they have going on for their circumstances to determine what the best options are. So please don't feel like I bite. Please don't feel like I'm going to push you into something. I absolutely am not. I am going to talk to you. I'm going to look at you. I'm going to look at your numbers. I'm going to determine what the opportunities are, and I'm going to show them to you and explain to you where I feel your best opportunity is. But ultimately, at the end of the day, I take instruction from you. You are the borrower. You are the homeowner. It is your choice what kind of a loan that you want. It is your choice what that monthly payment should be, how much debt you want to pay off if you're buying a home, how much down payment that you want to put down. So, please use me and, the other people on my team, Heather and, the girls, utilize us to help to guide you. Ashley says, this is what we would like to do: a HELOC for debt consolidation and hopefully a kitchen refresh. I know you don't have a crystal ball, and she did laugh, which I love that. But will we happen to see HELOC rates come down as well? So home equity lines of credit are tied to the Federal Reserve prime rate. The Federal Reserve prime rate, so we will have another meeting, I believe it's next week. So Ashley, make sure that you tune in, because obviously I'll be reporting on what did the Federal Reserve decide. Did they hold rates steady? Did we get a rate cut? Chances of them increasing interest rates, I just don't see that coming to fruition at this point. But home equity lines of credit, credit cards, short-term loans are all tied to the Federal Reserve prime rate. So home equity lines of credit are not going to come down in interest rate until the Federal Reserve starts to cut that prime rate further. Mortgage interest rates are not tied to the Federal Reserve prime rate. So I'm going to say this loud and clear. Next week, if the Federal Reserve comes out and says, guess what? We're slashing interest rates by 0.5%. Please do not call me and ask me, hey, interest rates went down by 0.5%. Do I get a lower interest rate now? It doesn't work that way. Mortgage interest rates are tied to the mortgage-backed securities market. It is a market. Mortgage-backed securities, notes, bonds, right? It is just like the stock market. And so our interest rates move based on news, based on reports, based on assumptions, anticipations. We move like a market. So mortgage rates are not tied to the Federal Reserve prime rate. Now, obviously, the lower that prime rate gets, mortgage banks can, or even big banks can borrow the money for less, which in turn they can then pass on the savings to you. So in time, it does help. The more that they cut those rates, it does help. But it's not actually directly correlated. And the last time we had a rate cut, our interest rates actually got worse. The last time that we didn't have a rate cut, which was 6 weeks ago, our interest rates got better. So there is nothing that mortgage rates are tied, but home equity lines of credit are. So we truly need to see the Federal Reserve start to, or at least not, they've already started, but we need to see them continue to make those rate cuts before we start to see those home equity lines of credit get better. She said, I will tune in with fingers crossed. And yes, and I love that. My fingers crossed too, because obviously, like I said, in the long run, the lower and lower that Federal Reserve prime rate gets, the better and better that mortgage interest rates will get as well. It's just a simple fact of we can borrow it for less, which means we can, lend it to you for less, but it doesn't necessarily, it doesn't make a difference. It's not immediate. And that Federal Reserve would have to cut that interest rate significantly before we would actually see that be a factor of why did our rate sheet change yesterday. So I hope that does help. But guys, applications are on the rise. More people are finding that they are benefiting. They can afford more in mortgage. So whether that be a purchase, whether that be a refinance, it is getting more affordable. Interest rates are better than where they were, which is why we're seeing that uptick in those applications. So if you have questions, I can do home equity lines of credit. We've got tons of options for those. I can do refinances. I can do purchases. I can do USDA, FHA, VA, conventional, jumbo, hard money, bank statement loans, non-QM loans, non-qualified mortgages. If it exists, I can pretty much do it. If it is residential, I don't do commercial. I'm not a commercial lender. But if you are wondering what your best option is for you and your family, and you want that specific, you want me to work up those specific numbers for you personally, I am absolutely happy to do that. And I do it without, I understand the situation that people are in. We've all been there. We've all had rough times. We've all charged up more than what we should. We've all ended up in debt at certain times that we couldn't afford. I do not look down on anybody. I do not preach to anybody. I do not force anybody to do anything. I want to make sure that I am making things better for you and for your family. And I want to give you that guidance and that education. So please don't feel like I'm going to bite. Please reach out. So once again, get my phone app, you guys. You can call me. You can watch my show. You can apply for your loan. You can run all of those calculators that we talked about throughout this show. So text the words, two words, phone app, PHONE APP. Text phone app to 844-935-3634. That's 844 we lend for you. WELEND and the number 4. You want to talk to me? Call the same phone number. You want to get your text message when I go live each and every week so that you don't miss a show and you can join us and ask your questions like Ashley did. Text live, LIVE. Same phone number, 844-935-3634. You can also opt in, guys, for the texting right through my website and go to mortgagemomradio.com. You'll see live show at the top. When you click on that, you can actually put your phone number in, and that will get you opted in to get that link once a week. Tons of stuff on my website as well, of course. And guys, I hope you guys have a fabulous week. It will be interesting next Wednesday. It'll be a great show. Make sure you tune in, and I'd love to answer any questions that you have. I hope you guys have a fabulous rest of your Wednesday, and I'll be back right here next week. Talk to y'all real soon. Bye-bye.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.